Royal Bank of Scotland, Britain's biggest government-owned lender, gained profits, that is recorded profits, for the first time since 2007. For more on this story, we partner now with the FT to bring you Lex on Bloomberg. You get a sneak peek at the Financial Times' flagship column a day early. Richard Stovin-Bradford joining us now live from London. Richard, always glad to have you on. Royal Bank of Scotland looks like a pretty good first profit in 3 years. Is it just about a reduction in bad loans?
It is really that, but look, they've done 9 million £9 million net income, and that probably buy you a nice house in the Hamptons. It's nothing to write home about, but the problem is that we need to see more of this coming through. And you're right, this is mainly about falling bad loan charges, and that makes it feel like Groundhog Day to me, because we've had that same story from other banks. It's the falling bad loan charges that are really driving profits at the moment. And then in Royal Bank's case, like with the others, if you like, slowing investment banking incomes, but those investment banking incomes are still carrying the show very nicely.
So some of the other banks that we've heard from this week, Richard, I mean, we can almost tie up the week with a bow. I mean, HSBC, BNP Paribas, Standard Chartered, Deutsche, all sort of continuing this theme, right?
They are. I mean, the thing that I think we need to worry about going forward is where the sustainable side of earnings is going to come from. And in Royal Bank's case, for example, they're seeing a bit more of a recovery in the UK retail and corporate side. And they, like Barclays, have said that they would like to have 1/3 of their income, 1/3 of their profit coming from investment banking and 2/3 from bread and butter, plain vanilla banking. Now, Barclays is completely the other way around at the moment. It would like to be like that, but about 2/3 of profit are coming from investment banking, 1/3 from spluttering retail banking, although it's recovering. But Royal Bank Scotland's already there. It's been de-risking massively. Its investment bank's still making a reasonable profit on half the balance sheet size that it had before going into the crisis.
So now it's basically all about margins, from what you're saying.
It seems to be. I mean, margins at Royal Bank are up at 3% net interest margin. That's quite respectable. Lloyds Bank, day before yesterday, came in at 2.08, I think it was, percent on a target of 2.5. But some of the cheap rubbish that was booked during and before the crisis has now started to run off, so that margin is beefing up. And this is looking good for taxpayers.
Richard, thanks as always. Richard Stovin-Bradford joining us there from the FT from London.